I hope everyone had a great trading week last week. This is another week. Today is Sunday, the 21st of September, 2025. It's just about 5:57 a.m., almost 6 o'clock New York time. And I'm just recording my analysis and sharing with the trading community. This is not financial advice. That's just my perspective of what the charts look like and what the market is presenting in my view. So take it with a little bit of a pinch of salt. I'm not perfect. I'm just trying to help out um, as much as I can with what I know and what I can figure out. All right. So without out of the way, let's get into the dollar index, the first asset I would like to look at. And on the weekly time frame, the dollar index is pretty much still in a very tight range. You look at all the closings from somewhere around August 18th week all the way till this past week. Our closing has been within a very tiny range. Okay. The liquidity sweeps has been pretty wide, considering how price moved all the way from like 97 to 68 all the way down to 95, 95, 911. All our target for last week has been hit. All the analysis target that I had on my chart has been hit. Um, I do see there is further downside on the dollar, but it's not going to go down as fast as most of us want. I think this range is going to continue. This choppy range, liquidity sweeps upside. Now we're getting our liquidity sweep to the downside. Now, on Friday, it had a very great chance to continue going down. Now, whilst a lot of technicals were pointing to a quick bounce, there were other things that also suggested that we're going to get a bounce on the dollar like this. The first one was the fact that right after the rate cut, the dollar gashed down with a lot of speed. Then Jerome Powell came to give the speech after the rate cut, and that speech was both interpreted by the market as dovish, but on the FX chart, this was interpreted as hawkish. Why was it hawkish? Because pretty much Jerome Powell was saying that this rate cut they put on the table is risk management based on the data on labor market. So really, they are not in an easing cycle as most of us would probably consider that they're going to be cutting rates going forward. Yes,